The Hong Kong Stock Exchange $2 billion acquisition of the London Metal Exchange is part of a shift by China to capitalize on growing domestic demand. And just the latest transaction by China to secure commodities for its booming economy. Economist and financial writer Dambisa Moyo has been following this trend. Her latest book is Winner Take All, China's Race for Resources and What It Means for the Rest of the World. Very interesting subject, and I gave one example, I suppose, of China's race for resources there in the introduction. And of course, in Canada, we're observing some of the things that have happened in Canada's oil patch. What are some of the major moves that you see China making in this regard?
Numerous, all over the world, not just the emerging markets, but also in developed markets. In Canada, laptops for pork, I know, is a big discussion here. But whether it's Peru, where China bought a mountain, it's half the size of Mount Everest. Whether it's China investing in land deals across Africa, investing in oil and energy with Russia and Kazakhstan, and beef in Brazil. I mean, it's just all over the world. It's a very, very deliberate campaign, which is basically focused on a symbiotic relationship. The Chinese are investing, they're doing trade deals, and in return, they get access to these range of resources. It's obviously the Chinese are able to capitalize on a vast amount of wealth, over $3 trillion in foreign exchange reserves that they've stored up over many decades. But in addition to that, they are becoming the key monopolist or the key go-to buyer for many resources such as copper and coal.
I have to ask you this, it sounds like nothing but upside for the Chinese with this strategy. But is there a downside to this? Is there a risk to this strategy that could backfire against the Chinese?
Well, absolutely. I mean, I think the biggest risk that they face is substitutes for these resources. And, the thing about the brilliance, I think, of the Chinese strategies that they're in parallel to trying to secure these assets, the traditional assets, resource assets around the world, they are also investing very heavily in innovative projects and in R&D. And in that sense, they are quite hedged from the strategy. But of course there are risks, and also you can imagine that the risks of expropriation, things that we've seen in Argentina recently, but also in Australia in March of this year, the Australian government decided to put a massive tax on iron and coal companies. So there are risks for sure, but I think by and large the strategy of symbiosis, so a benefit for both the host country and for China, has worked quite significantly.
Is there any way to estimate at how much of the world's resources or commodities does China either own or have the rights to at this point? Were you able in the work you did on your book to get any kind of a sense of that?
So it's very difficult to do that because a lot of places, let's take land deals, for example, these are on leaseholds, they're not freeholds. So it's very hard to get a sense of what the specific number might be. We do have some estimates, and I do talk about this in the book, of the amount of money that the Chinese are spending on a weekly basis. I mean, some of the estimates are around $1 billion a week since 2005. So significant investment in resource space in all aspects of resources, so from exploration to development and to production. So it is quite a vertical and horizontally integrated approach.
What's more important here, the Chinese, the economics or the politics of this? Is it, in terms of power that they'll be gaining from this? Is it driven by one or the other or equally both?
Well, it's sort of interesting. I think at home it boils down to politics. There is a political imperative. They need to stay in power. They need to make sure that the transition of China into a more industrialized nation is a smooth transition. But in terms of their approach outside of China, they're absolutely focused on the economics. And by that, I mean the whole notion that there could be neocolonialism or that somehow the Chinese are trying to dominate the world, I think is quite absurd. They are absolutely interested in securing resources to fuel the economic issues and development at home.
So a lot of these companies that are doing these acquisitions are state-run. How does that then affect how and what it means for the rest of the world, as you say in your title?
Yeah, so I mean, it definitely gives China an edge. State capitalism effectively means that they have a zero cost of capital. And I think this is where a lot of people who are Western trained or Westerners take issue with the Chinese approach because they do see China, what we would say, is overpaying for resources. So, for example, if a mine should be valued at 100 million, if the Chinese walk in and pay 500 million, most Western-trained people would snicker and say, well, they're overpaying. Don't they know how to calculate the value of an asset? But actually, they have a much broader utility function. They are interested in securing resources and interested in making sure that they can supply those resources at home. And by that measure, they're willing to pay much more for it. And obviously, the fact that the Chinese government is involved means that they are able to negotiate and to pay these vast sums of capital.
Well, yes or no? Should we as Canadians be afraid of this strategy, or should we embrace it?
Oh, I think absolutely embrace it. I think there are benefits to be had on both sides. I think that the broader question of supply and demand imbalances around the world will persist. And I think the strategy that what I urge in the book is one of multilateralism, where the Chinese have already made significant gains. I think the rest of the world needs to catch up. And I do think that there are gains for host countries as well as for China.
Well, Dambisa Moyo, nice to have you here.
Thank you very much. Thanks.